Hey, what's up everyone? It's David here. I realized in my zip video, I talked about Australia entering into a recession for the first time in 29 years, but I never talked about what to do during a recession. So in this video, let's talk about how to invest in Australia like a millionaire during a recession. Wait a minute, you must be wondering, this random dude on the internet wearing the same black t-shirt every single video cannot be a millionaire. And you're right, I'm not there yet. But according to my plan, my portfolio is worth approximately $70,000 at the moment, and I invest approximately $5,000 to $6,000 per month. Even with a measly 5% return, I will cross the millionaire mark in 10 years. Now, I intend to cross that mark in 7 years instead of 10. So part of the reason for starting this channel is to take you along the journey with me, just so that I can show you that there is nothing special with what I'm doing. In fact, it's actually really simple. So we'll go through how to invest during a recession, and then we'll wrap up the video with a portfolio update. If you haven't noticed, I chose to disobey my Asian expectations. And because of that, I'm just a mere mortal and not a professional. So don't use this video as financial advice. But if you do learn something new, consider gently smashing that like button right there, and that would mean the world to me. So without further ado, let's go! So for the first time in 29 years, Australia experienced 2 consecutive quarters of negative GDP growth, and because of that, we're officially in recession territory. Now, if we zoom out and look at a longer time horizon, and frankly, this graph just looks like my Asian parents' approval rating on my life choices, especially when I told them that I quit my corporate job so that they can't brag about where I work during Yumcha anymore. I suffered a major contraction in my approval ratings. Now don't worry, I have patched my ratings since then, and I want to acknowledge that this recession has caused a lot of suffering, and some of us have been impacted more than others. But I do want to show you that these recessions can be an opportunity to fast track your way towards financial independence, where we're no longer reliant on anyone for a paycheck in the future. And what I'm about to show you, you can think of these as investing principles that have stood the test of time. And they are absolutely the things that I've already implemented in my life. Now, the first thing is treating investing like a habit. If you've been following me, I'm a massive evangelist for dollar cost averaging, and I invest the same amount every single month. Actually, let me rephrase that. When times are bad, I actually invest even more. Now, of course, different people have different opinions here. Some people say that you should sell everything and turn it into cash, and then re-enter the market at the bottom. The challenge with this thinking, again, is that you have to be mostly correct with your timing. And if you choose to do this every recession, then you have to be right multiple times. For whatever reason, if you just miss 10 of its best days in the market, your return of $10,000 invested in 2004 will be $22,000. If you just don't touch the money and stay in the market, that $10,000 invested in 2004 will be $38,000. And for whatever reason that you missed just 20 days, your $10,000 invested in 2004 will be $14,000 today. Instead of, if you just stayed in the market, it will just be $38,000. So for me, I guess I'm a get rich slow kind of guy. And treating investing like a habit is the best way for me to stay in the market and not panic sell when a recession happens. Don't get me wrong, if your circumstances make sense for you to sell in order to preserve your wealth, then you gotta do what you gotta do. Now, building on the first point, to treat investing like a habit require you to have money to invest every single month. And how are you supposed to invest more if you spend more than you make? Personally, the recession is a great catalyst to scrutinize every single dollar that's going out of your account. Do you really need to buy now, pay later that pair of shoes right now? The point is, you want to spend less than you make so that you can invest more every single month. There are many different ways to tackle this. You can use a monthly budget, or you can implement a financial independence tax on your income so that a certain percentage of that income gets automatically routed away into emergency funds or your investments so that you're forced to work with a smaller amount of expenses. Now, as it stands, I invest approximately 50 to 60% of my income at the moment. And that money goes either towards better equipment so that I can make better videos for you, or it goes towards my emergency fund or my investments. Ultimately, you have to decide the life that you want to live down the track. And I chose to live a minimalistic lifestyle now, so that in the future, I'll never have to rely on anyone for a paycheck. Now, when you continuously invest, your portfolio will grow on its own growth. And the earlier that you start, the more fuel you're giving compound interest. Now, if we look at this graph here, for $5,000 invested annually with a 5% growth rate, if you started at age 25, you will have $639,000 by age 65. Now, if you started 10 years later at age 35, you will have $353,000 by age 65. That's a massive gap. Even if you start investing later at age 35, $353,000 on top of your super is no laughing matter. That's if you invest $5,000 per year. Imagine what you can do by investing $5,000 per month. So in the previous example that I just showed you, we invested $5,000 per year for 40 years if we invested starting from 25 at a 5% growth rate. And the amount is approximately $639,000. What if we did that per month over the exact same period? If we did that per month, by age 65, we would have $7.6 million in our retirement account. Even if you started investing when you're 35 for 30 years, if you will, the retirement account is worth $4 million. There's a reason why they say compound interest is the eighth wonder of the world. And frankly, the more you invest and the more time that you give compound interest, it will do wonders for you. So for this video, I focused on how to invest during a recession. But if you're curious about what to invest in, I created a video on how to invest $10,000 in Australia for a beginner. So I'll leave a link in the description box below for anyone who's interested. I have a bonus note I want to get out of my chest, especially in this recession. Now, we talk a lot about diversification for our investments, but I think what's even more important is diversification for our income streams. Now, according to CNBC, 65% of self-made millionaires have more than 3 income streams, and 45% of self-made millionaires have 4. Now that we're spending a lot more time at home, this is an incredible time to think about how you can build an additional income stream outside of your job and investments. Can you help other people with designs? Can you take beautiful photos for weddings? Or can you write really funny newsletters that people will pay you a monthly fee for? There are so many ways to build side hustles now. So think about what you can do with your skills that other people will ultimately pay you for. And if you're thinking that I don't have other skills that people will pay me for, I will encourage you to dig deeper. If not, learn something new, do it for free for other people, build up your portfolio, and then charge clients for it. Because if you can build your side hustles now, the next time a recession hits, you'll just brush that off your shoulders and just move on with your life. Now, over the week, very interesting things happened, especially on September 1st, 2020. Now, on that day, Tesla has announced that they will sell up to $5 billion in stock. And there are about 10 banks involved in this deal, but this amount is not sold right away. It's basically up to Tesla when they want to sell and at what price they want to sell. At this point, Tesla have no issues raising that amount of money, which is great to see. But the market has reacted pretty negatively towards that. Now, it's probably fair to say that they didn't react negatively towards that piece of news, but more so towards after the stock split, it went up to all-time highs, and I think some traders have just taken a bit of profits. Now, a day later, one of Tesla's largest institutional investors, Bailey Gifford, had to reduce its stake in the company by 5% at the end of August. Now, this is an enforced reduction. It wasn't really by choice. In certain managed funds, there is guidelines that no one stock can be more than a certain percentage of a client's portfolio for risk management's sake. Now, in its flagship fund, Tesla was already 13% at the end of July. Can you imagine what that percentage would have been like towards the end of August after the stock split? So it was just more of an enforced reduction and people reacted pretty negatively towards that and the share price went down even further. Now for me personally, I don't understand why those two pieces of news would negatively impact Tesla's share price. So as it declined, I bought some more. I'll show you my new position in Tesla in just a second. Now, some of you have asked whether I am holding on to my Talga and Novonix position, and the answer to that question is yes. I plan to hold on to them for at least 5 years, and I'll slowly build out my position during that period. Now, I will also want to remind you that every single day, the market fluctuates. One day, it's red, and another day, it's green. It's more important to consistently invest, and if you were to choose individual stocks, make sure you do your due diligence and build out your own investment story. As long as you are confident in your story, this fluctuation in prices shouldn't distract you investing long term. And I also want to remind you that my portfolio in Talga, Novonix, and Volpara, this is a joint investment portfolio with my girlfriend. So I'm using self-wealth for that, and I'm still playing around with it. And I will report back in the next few months on how I like self-wealth. Now, before I do a portfolio update, if you want access to my video scripts, my research, and also be part of my fortnightly Q&A, not to mention some additional content pieces, consider supporting this channel via Patreon. Now, I'll leave a link in the description box below for anyone who's interested, but nevertheless, it already means the world that you're watching this video. So thank you very much, and let's jump into a portfolio update. So for my CMC Markets portfolio side of things, it's currently worth approximately 53,000 Australian dollars. And over the last week, the markets did pull back, and the pullback have shed around $1,200 off this portfolio. And honestly, I'm not really fussed, but I do want to remind you that I'm a long-term investor and I plan to invest no matter the times are good or bad. I am still thinking about where to invest my August portion of my capital. It's very likely that I will invest in VTS or some of the American stocks, only because as the market pull back, I see it as a better opportunity to re-enter or enter even more. So for my stake portfolio, it's currently worth about 11,900 plus 300, so approximately 1,200 US dollars, which is approximately 16 to about 17,000 Australian dollars. And yes, when the Nasdaq pulled back, it did shed approximately 1,000 to 1,500 US dollars off this portfolio. But I do want to remind you that, again, as the market pull back, depending on the reason for pulling back, I do see it as an opportunity for me to invest even more. I will keep you posted in terms of what I do on this side of the portfolio, but just to show you my new position in Tesla, I did add some more into this position. As the prices went down, I bought some more. Now, Dropbox and GoPro are not part of my portfolio. They are free stocks that's given to me if you do decide to try Stake for yourself. I'm not sponsored by Stake. I just use Stake because it's incredibly affordable and it's also very, very easy to use. So on that note, if you wouldn't mind getting a GoPro, Dropbox, or Nike when you try Stake for yourself, I'll leave a link in the description box below. Now, if you learned something new, just make sure you gently smash that like button right there, and that would mean the world to me. In my next video, I'll be talking about Reese Australia and also Center Group. I know you've been waiting, but I want to make sure that if we spend time together, it's definitely worthwhile and fruitful. So make sure you subscribe to my channel and click onto the bell so that when that video is ready, you'll be the first one to know. As usual, Otto will always do the honors, and see you very, very soon.